What's up everyone, this is Ryan here, the Crypto Grinder, and today I'll be bringing you this episode about creating your first portfolio in cryptocurrencies. Now, this is an excellent video to watch, especially if you're very new or you're 1 month into the space, or you basically still have no idea how a portfolio should look like. This is the video for you. Now, I think ever since January, right, I was advising my private clients and very close group of friends on investing in cryptocurrencies, and they have had tremendous success in terms of creating a portfolio, and at the same time they've enjoyed amazing returns. Now, what happens when the markets have stalled? What are the strategies that we use? What should we do, especially when the markets are tapering off in terms of volume, or what's the direction going to be like? I think that always kind of irks anyone who is new, because they've never experienced a pullback or correction or bear market, because they may not even know what that is, right? So I've created a community which is in my Telegram chat. You can actually go to the link in my description and join. It's free to join. We're here to basically educate, value add to each other, and at the same time just talk about cryptocurrencies. Now, when you create a portfolio, you must always bear in mind that you need to understand your own financial objective. Why are you even investing in cryptocurrencies? That's the most important thing, right? Are you investing because someone told you about it? Are you investing because you want to save up for your education? Let's say, for example, you want to pay off your education loan, or you intend to study. Maybe, for example, you want to retire, someday, right? With an X amount of money. So all these things, there are many financial objectives, and you have to identify that when you create your portfolio. Now, of course, naturally, should your portfolio be only in cryptocurrencies? No. You should actually still diversify in various asset classes. So what do I mean? Usually from time to time, I talk about gold or silver. There are times where I talk about looking at stocks. I discuss all these things with my private clients, and I think this is something that's very essential, which is lacking in the market right now. Because when you talk about portfolio management and advisory, I think not many people would want to do that, because right now honestly there's no license. Okay, there's no license that governs you advising. And honestly speaking, the public deserves to know, right? The public needs to know what to do. And of course, based on the fact that I've done all this before, back in the day when I was a banker, right, where I had to advise clients on creating portfolios in the banks, it's this kind of thing is only for high net worth guys. And I feel that the people who want to invest, say say $5,000, $1,000, they don't know what to do. They don't really have anyone that they can turn to, right? They're just listening to anyone and everyone, because for them to walk into the bank and get financial advice, right, it may be a little bit challenging, because the moment the banker is going to ask you this very same question: how much are you planning to invest in this market? And then if you say, oh, I'm going to be investing, say $1,000, $10,000, usually more often than not, the service will be kind of lackluster. Because why? There's not much meat on the bone. Okay, to simply put, be very direct. There's not much commissions that they can earn off you. So they're just going to give you one product, and it's probably going to be a savings plan or a mutual fund that is going to give you, say, anywhere 3 to 5% per annum, that kind of thing, right? Very conventional. No one in this space at the moment is gonna tell you what to do, or at least gonna recommend anything, because like I said, it's really the Wild West now. So I want to just create this video for you to decide for yourself how you want to move into this space. And I hope that these slides will give you an idea on how to create that portfolio. So let's get started. Now, before you start buying your cryptocurrencies, okay, first find a reputable Bitcoin exchange or Ethereum exchange, right? Download the wallet, all right, whether is it on your desktop or mobile phone, and make sure that you own the private keys to this wallet or these wallets. Sign up on a trading account. So when you sign up on a trading account, it may take you, signing up is fast, but it may take you a while to get fully verified, right? So we're talking about the popular exchanges like Poloniex or Bittrex. Okay, so before you start trading or investing, get yourself fully verified. That means do all the necessary documentation. Don't wait until your portfolio is large enough, then you submit, right? Because you want to be able to take profit from the market, and you don't want to be stuck with, say, a $2,000 limit. Okay, so get yourself fully verified, submit the documentations necessary the moment you start, especially if you're new and you're watching this video. Read up on what are cryptocurrencies. I think you need to understand what you're investing into. So just a general idea, cryptocurrencies are basically probably tokens or crypto assets, right? That are from the blockchain, right? And also when you mine, okay, when you mine, you get cryptocurrencies, and they have a value that can be exchanged for value in terms of US dollars or euros. And of course, they do serve a purpose on that particular blockchain. Depends, right? And you need to also make sure that, are they inflationary, deflationary, meaning that are they an infinite supply or finite supply, stuff like that. So all these things, of course, I do cover in my private consultation. So, we can really go into the analytics and fundamentals, but for this, we just keep it very general. Understand the risk involved. Now, this is so important that I cannot emphasize enough. When you're talking about risk, right, of course, there's the risk of the amount of money that you're willing to take when you invest in this market. There's also the risk of, the investing in cryptocurrencies. Now, investing in cryptocurrencies, there are so many risks involved that I cannot. Okay, when you invest in cryptocurrencies, firstly, you must understand that this is a technology. It's very new. Most of them are in alpha or beta stage. They have no products for us to use at the moment. And, they are still in really literally only the developers or programmers are able to, create stuff, right? So when you invest and speculate on it, what are you basing your judgments on? A white paper, the website, the community, the developers engaging you, what are the progress? For example, what kind of, where are they being listed? Which wallets are supporting them? This is literally the news that we work on, and it's extremely extensive. And if you have a day job, it's a little bit hard to keep track, okay? And when life gets in the way, obviously it's not going to be very easy for you to, narrow it down. So you have to understand the risks involved, okay? There are hacks that happen, coins go missing, programs go having bugs or errors, a lot of stuff, okay? So I'm not trying to scare you, but this is just the way it is. So just understand the risks involved before you step into it. Now, secure your account with a 2FA or whitelist your accounts. Now, what do I mean? Naturally, a 2FA is your authenticator. When you log into your trading account or a wallet, right, usually there will be a feature that allows you to key in like a set of numbers, or even basically it's Google Authenticator or something like that, right? To that effect. Usually it's a Google Authenticator, and that is a separate app that allows you to not only just after you key in your email and password, the 2FA will also verify you. Okay, so make sure after you've done that, you also whitelist your accounts. So only Bittrex at the moment has this whitelisting of your accounts, where you can whitelist your withdrawal address, which I find is pretty good, right? Because if you cannot, because if you're doing a withdrawal, you want to whitelist this address so that, just in case you get hacked or something like that, right? The money or the cryptocurrencies can only be withdrawn to that address, which is very specific to you only. So yeah, this is something that only you can do, right? So just take note. Do not touch margin. For now, I think that when you're very new, it's always just good to pick those cryptos and stay invested in those cryptos, because when you don't have enough, liquidity and you start on margin, right, it becomes very dangerous because the volatility is huge in cryptocurrency. So margins mean that, okay, for example, if you have $10, it will give you a margin of 2.5 times, especially on Poloniex, right? So you have $25 to spend. Now, what happens if the market pulls back 20 to 30%, which it can easily do on any given day, right? You most likely will get a margin call because you clearly don't even have enough. So always use margin only when you have become more seasoned in trading, and at the same time, you're using it as a hedging strategy against a falling cryptocurrency. So that's how you should actually use margin. But when you use margin, you have to have a portion of it to take on the volatility. So instead of putting the whole $10, you rightfully should be only using $1, right? Or $2, so that that buffer or that $8 behind, okay, is going to be able to handle the pullbacks, or if you're in the wrong direction, any direction basically, there's enough buffer for it to move around. So just take note. Okay, now understand the basic charting and indicators. Now I think charting and indicators are two different things, right? Charting are charting patterns. Indicators are used to look at volume, looking at the moving averages of the prices. Usually it's always about the prices and of course the volume. So look at a few indicators, like for example the support and resistance, your RSI, relative strength index, the stochastics, sorry I spelled that wrongly, MACD. Okay, these are the things that we can use, okay, or the Fibonacci levels. You can use all these so that you can determine the best points of entry or exit in your trade. Okay, so that is like, you can go and research that and Google that. It's all available on the internet, but make sure, of course, at the end of the day, you want to be reading up on a credible source. Now, placing your very first trade, this is the exciting part, right? Selecting a crypto that you have already researched thoroughly on. This is one of the first priorities, right, that I always emphasize, because whenever people come to me, right, they just want to buy and they didn't even research, because you know, they see their friends or they read about it on the papers, but they don't even bother to read about the cryptocurrency that they're buying. Okay, and that makes it so dangerous. You cannot imagine how much money you can lose, especially when it pulls back 20 to 30%, and then after that it starts rallying, but you've already panic sold, right? Because you didn't even believe in the cryptocurrency in the first place. You were just in it so that you can win it quick, but then when it pulled back, you didn't even know why, right? So you have to understand not only the market, but you have to understand, are there any underlying factors that could have caused that cryptocurrency to pull back? And if those underlying factors cannot be found, and it was just purely just usual take profit, right? Then you panic sold. It's just a shame, because maybe if you had researched thoroughly, you would understand the roadmaps and you would understand the developments or who are backing the project, that going forward, it will actually, you know, be 5x or 10x. But because of that initial volatility and you not understanding enough about the crypto, you had to panic sell. So, you know, stuff like that. So please research thoroughly before you place your trade in that particular crypto. Now, what is the bid and ask price? So this is pretty simple. On every exchange, there's a bid and ask offer. So bid is basically the bid price where you want to sell your cryptocurrencies, and then after that, your ask price, your bid price is when you want to sell your cryptocurrencies. That is the bid price, the current bid price for that particular period. Then the ask price is where someone wants to sell to you. That's the offer price. So if you want to say buy or hit the market, right, you need to, of course, queue or at least put your order in at the ask price. Now, if you plan to sell your crypto, you are only able to sell your crypto at the bid price. Now, does it mean that you immediately sell everything? No, it would depend on the market price at that point and whether or not your market price is in line with the bid or ask. So you have to make sure that when you put in your order, okay, it is at a price that you want to sell at, and also the market price has to reach that price, and there has to be enough let's say you're selling, there has to be enough buyers who are willing to buy at the price that you're willing to sell. Okay, that's one. Or if you want to buy, there has to be enough supply of cryptocurrencies that are willing to sell to you at the price that you put in as a queue price. Does that make sense? Okay, so this is just basically the simple things, right? Bid and ask. All right. Now, the next thing is, of course, decide on a take profit or stop loss. Okay, so this is basically, are you in a short-term trade or are you here for long-term? Now, when you are doing a short-term trade, okay, say for example, there is volatility in the cryptocurrency. Say you have a range of, there's a range that you can trade on 5 to 10%, right? So that's the most likely take profit price that you should set at, because the range is only 5 to 10%. You can't set at 15% when the range is only 5 to 8%. You get what I'm saying? So you have to understand that. Now, there is a stop loss that you have to put as well, because if you don't prevent a stop loss and it falls out of your range, right? It could be pretty disastrous. So you have to make sure that you have a stop loss in place after you purchase the cryptocurrencies, so that you prevent any losses that you are not able to bear. Okay. Now, this only applies if you're doing day trading. For example, your position is for 3 days, 1 week, that kind of thing. So you have to understand, you have to know what you are planning to do with the portfolio or that cryptocurrency. Now this is completely separate, but it's just part of the trading strategy. Now, double or triple check your order before placing it. If you don't, sometimes there are people who key in their orders wrongly, and it doesn't get sold, or you couldn't buy it because you missed a number, or you missed the decimal place. Now, another thing that's pretty scary is that when you set at a price that's too high, okay, it has happened before that I actually missed out on one of the zeros, and I actually bought into an order that was way higher than what it was supposed to be. Okay, so it wasn't a huge amount, okay, but I'm just telling you that for some reason, right, the system did not even catch that, okay, and it allowed my order to be bought at such a high price. On normal systems, right, they would usually allow you to hit the market, okay, because it's already there. But for some strange reason, right, there were probably people actually queuing at that price, and that's why my order got filled. Or there's no fail-safe feature. So please bear in mind, okay, this is from my personal experience. I mean, it was just a really simple mistake. But imagine if you were not able to handle that. That means you would have bought so much higher, and you would have wasted all your Bitcoins, and you wouldn't even be able to reach, your crypto wouldn't even reach that price. So just take note, okay? It's just a safety feature. I mean, it's a precaution. It should not happen. Okay, so basic portfolio. Now, you have to have a financial objective, right? So what is your financial objective? You're looking at retirement, debt repayment, investment savings, loan repayment. You have to have a proper strategy, okay? So once you identify that strategy, you want to go into crypto allocation. Now, each cryptocurrency should not be more than 15% of your overall portfolio. Why is this important? Why not 10%, or why not 20%? Because when you have volatility, okay, you don't want any one particular crypto to drag the whole portfolio down in terms of return, right? So the weightages is very, very important. Even though you may believe in a particular project very much, that particular project may, of course, still fail you. So having a very even spread of cryptocurrencies, or allocation into your money, spreading your money evenly, does help you out, okay? So this is one thing that you have to take note of. Now, 15%, why not 20% then? Then it depends on how many cryptocurrencies you have, okay? So to be honest, this is a little bit tricky, because there are so many cryptocurrencies, and I've seen people who have 5 to 10. I've seen people who have 40 to 60, okay? Trust me, the 40 to 60 is way out, and honestly, I think when you do something like that, you're spreading your money too thin across too many cryptos. You want to be able to track, because you're alone, right? When hedge funds, okay, or fund managers, okay, spread their funds, they are looking in the billions, or at least few 100 million, so they can spread across quite a number of stocks, right? And they have teams of analysts. You have analysts, we're talking about financial analysts, we're talking about traders, all looking and researching into these cryptocurrencies. They don't have to have a huge team, but at least they have a team. But if you're alone and you're just buying randomly just because of someone telling you this, or you saw it in a group chat or something like that, that's just wrong, man. Take your time. Take your time to decide which cryptocurrencies you want to buy, and then just decide. Say you have $1,000, and then you divide that 20% each or 15% each, right? And then every time you review your own portfolio every month, what's the volatility? You have to track, right? If you don't even know how is your portfolio performing, right? Then it's going to be very challenging for you, because you are going to come back one day and then you turn on your blockfolio or whatever, okay? And then the next thing you know, the portfolio is down 40% and you don't even know why. Okay, because why? Maybe you were too overweighted on one of those cryptos that were rubbish. Just saying. Okay, so next, focus on stable and consistent returns. We're looking at 10 to 15%, okay, per month. Let's be real, folks. This whole month, if you are really looking at the proper cryptos, that is usually the return. And I'm kind of happy that, you know, we have had this slowdown, because it made people realize that you're not invincible, okay? And if you don't have a proper strategy in place, you're gonna just panic and panic and panic, right? And of course, naturally, if you're someone who is new to cryptocurrencies, you want to be able to pick the cryptocurrencies at better levels than when it was at the high. Okay? So I think having this kind of slowdown at the moment allows people to think rationally. And I think this video is really going to help out, you know. So decide which cryptos are mid to long term. So those are the foundational cryptos. Now, those have to be around for 2 years at least, okay, to have a good range, or even 3 years if you're really tight. Now, of course, naturally, Bitcoin is the father or the mother of all cryptocurrencies. But that being said, the Bitcoin dominance is gradually going down because there are just basically more exciting technologies out there, and we don't want to miss out. So you want to be able to just diversify your scope a little bit more. And there are foundational cryptos, for example, Ethereum Classic, for example, Ethereum, for example, Litecoin, right? All these cryptocurrencies serve a very unique purpose. And at the same time, they all have good teams behind that, or leadership behind them, a community behind them, that you should at least consider one or all of them, you know, as a foundational, right? So it depends on how much money you have that you can place in, and at the same time, what are you going for? Mid to long term? What are we talking about mid to long term? We're looking at 12 to 24 months. Some maybe even be willing to invest longer than that. If you're willing to invest longer than that, say for example 24 to 48 months, okay, you want to look at the good stuff, okay, and not the speculative stuff. Okay, now hedging strategies. Now hedging strategies is of course a simple one is taking profit to USD Tether or altcoins, especially when you're in the money for a particular trade. Now what does in the money mean? Naturally, you are in profit. That's what it means by in the money. So you want to, of course, decide whether or not do you want to take profit in an altcoin, or you want to take profit in USD Tether. So these are the things that you can decide. Okay. Now, advanced hedging strategies. Now, this is only for private consultation only, where I look at very strategic asset classes outside of cryptocurrencies. Because or you can look at derivative products that protect and hedge against downside risk. Okay, or you can even enhance your returns with particular derivative products, right? If you don't want to release your existing tokens. So these are the things that I will discuss during private consultation only, because this is definitely more advanced. So with that being said, thank you so much for watching. I think this video would have helped you out to a certain extent, and I hope that I want to see people be more educated and be more informed when they make financial decisions for cryptocurrencies. Now with that being said, thank you so much for watching, and don't forget to click that like button and also the bell, and don't forget to subscribe. Thank you so much.